Podcasters, ready. Podcast listeners, ready. 3, 2, 1, go. If you want to understand what on earth I'm going on about, you need to listen to the end. But it is Market Update. And this week, during the episode, we bring you insights that actually go against the headlines, but I think that you are going to find really, really interesting and hopefully you can use to your advantage.
Yes, thank you for joining us on the Property Podcast. In case you don't know, we run a business that buys more than £100 million worth of property for our clients every year. You can find out about that at propertyhub.net/invest. But this is the monthly episode where we bring you up to date with everything that's going on in the world of property. I will warn you, this episode does get progressively sillier. But before things unravel, we do have some really important insights that you can make use of right now to help you do better in property. So keep on listening.
Before we get into this week's episode, just a quick reminder that we are going to Dubai. And if you want to join us, you need to be very quick because we're going next week. So we are holding our first international event next week. We're very, very excited. It's great that we're at this place now where we can do things like this. If you are in the UAE and you would like to join us, then head over to propertyhub.net/Dubai, where you can find out all about our event that is taking place next week in Dubai. Can't wait to see so many of you there.
Yeah, that's a big one. But we've been doing virtual events as well. We held an online event the other day, hundreds of people joining us. So thank you if you did come along to that one. And if you didn't know about it, well, that's because you're not subscribed to Property Pulse, our free weekly newsletter. So to get all the news dropping into your inbox for free every Friday, plus the odd exclusive event invitation, you need to get over to propertyhub.net/pulse and get yourself signed up. Now, time to round up the news. What's been going on in 2025 so far in property? We're going to be talking inevitably about the Renters' Rights Bill. We've got some surprise news on rents and some behind-the-scenes insight on the build-to-rent sector. But before we get to all that, we have to start, Rob, because we always do, with house prices. And house prices off to a slow start to the year, according to Nationwide. Just a 0.1% increase in January. And another small increase, according to Zoopla. They only have last year's growth at 2%, which is lower than Nationwide and Halifax did. But they are noting, Rob, that demand is 13% higher than last year and 26% higher than 2 years ago. So is this slow start just people taking a little bit of time to wake up and get into their year? Or is it going to be a softer market in general?
I get the sense it's just been a slow start. And I feel that from the conversations that I'm having with people in property. I don't know, it feels like the property industry has kind of stumbled into 2025. Developers haven't been ready to have the big conversations yet. There's a lot going on, distracting them elsewhere, and we'll come to that shortly. There's some interesting insights we can give you. But I do feel that it has been, for the whole property industry, a slow-ish start. And I do think it's just a seasonal thing. I do think it'll pick up. Really interesting though, Rightmove, which is more forward-looking, because Rightmove measures asking prices. So asking prices gives you an idea of how people are feeling about the market. And asking prices have increased, according to Rightmove, by 1.7% in January, which is quite a lot for a month. Now, you could also say that's the New Year optimism if you're going to counter it the other way. But I do think that we can't suddenly judge the whole year on 1 month's worth of data. I think we need to have a few months run to see where we're at. But basically, quite nothingy numbers at the moment. But Rightmove showing that there is a bit of optimism for the future.
So we're talking about house prices in general. But of course, that is an average. Where you invest, where the house is, makes a big difference. And Rob, of all the biases, my favourite is confirmation bias. Every week, I pour through the news trying to find people echoing my own views. And I found it in some Zoopla data where they're talking about where they believe prices are going to rise and fall by the most. So if we look at the bottom 10 markets in England, it's no surprise. Southeast London is just wall-to-wall southeast. And where they believe markets have the best prospects, in there we've got Newcastle. We talked about that in our hotspots. Leeds, that was in our hotspots. We've mentioned in the context of Greater Manchester, we're looking for deals. Wolverhampton, we mentioned as well. Manchester is in there. It seems, Rob, that we and Zoopla are aligned on this. It's very much the north and part of the Midlands, which is where the growth is going to be this year.
Yeah, the next best thing to be proven right is just people agreeing with your point of view, Rob. So it's great that Zoopla have come out with this data. I'm sure they didn't listen to the property podcast on Hotspots and then delivered this piece. I'm sure it is their own research. They've got a big team. But still, it is nice to see. And those in Scotland will be very happy as well. hello to our dear listeners there. They are expecting some strong performance in Scotland as well. Now, we've talked many times why, for buy-to-let purposes, we wouldn't touch Scotland at the moment, and I think rightly so. But just if you own a property there and you're already committed to the area, house prices, according to Supla, should do quite well this year as well. Now, I expect we will keep you updated throughout the year on house prices, where they're going, and which areas in particular are going as well. Moving on from house prices now, Rob, I'd like to talk about an article that we picked up in the FT. And the headline reads, Private Equity Steps Up Bets on UK Rental Sector. They're not as good as the Daily Mail or Daily Express, are they, for headlines? But
you won't believe what private equity is doing to the residential sector.
Yeah, that's more like it.
Number 5 is shocking.
We should get involved and help them out. However, it still captured our attention, this headline. And it captured our attention because I was surprised, because it's not what I've been experiencing in the market, and it's not what the team have been experiencing in the market. And I'll explain. What the headline suggests is that the build-to-rent sector is seeing a lot of money coming in, and now from private equity. And yes, a lot of money is coming in, but the article compares the amount of money coming into the market to 21 and 22. And actually, when you look at the charts, the amount of money that came into the market last year fell. So the headline suggests things are on the up and up. But my experience, and when you dig into the article, it shows that 2024 actually fell compared to 2023. So yes, 24 is bigger than 21 and 22, but it fell compared to the year before. And that very much echoes the experience that I'm having with developers. And this article focuses on single family homes. And I do feel at the moment that the institutional money had for many years been focusing predominantly on city centre new build blocks, but they absolutely have started to shift their focus and are now doing more of a mix. It's not that they are exclusively doing one over the other, but I think they are now doing single family homes more, but not as much as they have previously. And that number is falling. Institutional money has dried up. It's just not there. They are still active in your prime areas like Manchester and Leeds and London, of course, but outside those big areas, the money isn't as available as it once was. And one of the reasons for that is lending. Lending costs are higher. A lot of these institutions will leverage and use lending to be able to facilitate these transactions, particularly private equity firms. And this is also why, Rob, housing associations who are building up huge portfolios and acquiring huge amounts of stock have really pulled back because of lending. Now, whereas they're paying 4, 5, 6, 7%, depending on who they are, when previously they were paying half that, the models and the numbers just don't work for them anymore. And what that's creating is opportunity, because we've been busy in Property Hub Invest off the back of all this. So I think this is fascinating, Rob. One, how a headline can be so misleading. And I don't think the FT have done this for sensational purposes. It just is a bit misleading when you actually know the full picture. But two, it's knowing that full picture and having the boots on the ground to actually see what is playing out. And then luckily being able to share it on a podcast like this.
Yeah, it's a great thing about having a team out there doing this every day. I think it's so interesting because build to rent is always eye-catching because the numbers are big. So if Lloyds Bank or Aviva or whatever goes and puts £100 million into a scheme, that's a big number. And so it sounds like a lot. And you're not going to get a headline. There's like 100 buy-to-let investors went and did something this week. So it always gives you the impression maybe that there's more going on than there is. The build-to-rent sector is growing fast and they are doing ever more in family homes, like you've said. But if they are slowing down now and housing associations are slowing down and landlords are supposedly on the way out, who's going to buy these 1.5 million homes, Rob, that Labour is surely going to build? And who is buying up all this stock from developers that's completing now?
Well, they do sell to owner-occupiers. That is absolutely the case and true. But the average rate for a site or a development is between 1 and 2 homes a week. So when you go to these sites and you see the show home, on average, depending on what region they're in, they sell between 1 to 2 properties. But then you look at the size, and it's got hundreds and hundreds of properties on. So what do? Well, they work with housing associations or build-to-rent institutions. But if that's not in place, what happens? Well, Property Hub Investors waving in the background, and we are doing huge volumes. And this year, we look to do more than we've ever done before in terms of volumes. And I think it's really interesting that how our clients are taking advantage of that at the moment, because we're doing a lot with what we call national home builders. So if you think of those big home builders, the names that immediately pop to your mind as I say this, we're working with them. But in the 14 years or so we've been operating, it's not been consistent that we've worked with them. The relationship has always been there, but the market hasn't always been there. When Help to Buy was in place, you could barely get them on the phone. They were so busy and selling so much that they didn't need us. And then when events have taken place like Brexit or COVID, then they've got nervous, then they've asked us to step in. And that's what's happening at the moment. So our clients are absolutely taking full advantage of that because they're able to get discounts off these big names that you can think of that normally you can't get, more than a couple of % off. And now we're doing it month in, month out. Very much a case of making hay while the sun shines, though, because if Help to Buy comes back in 6 months, well, that buying opportunity will disappear again. So you do have to take advantage of it while it's there. But this is where I geek out, Rob, when you are so close to the action and you are seeing what's taking place and it is different to what's being reported out there.
Yeah, we are seeing so much good stuff from these developers at the moment, which, as you said, has not always been the case. So yes, we and our clients will continue to take advantage of that while it lasts, because it doesn't feel like a window of opportunity that's going to stay open forever. Let's move on to rents. And I'm going to say a few words, Rob, that you haven't heard for a long time. I'll leave you to write your own joke there. I'm actually going to say the actual words, which are rents have fallen. What? Rents have fallen for the first time since 2019. Now, this is only on advertised rents, so it doesn't include within tenancies, which are still increasing. And it is only by 0.2%. But a fall is a fall, Rob. This is genuine news. Rents have fallen.
And you know what, Rob? It makes sense. Because we've said many times now on the podcast that while the property market is complex and it's more than just supply and demand does impact the property market, but there's so much more to it than that. The rental market is a lot more simplistic and it's easier to predict. And right now, there are 13% more rental homes on the market compared to the same time last year. But the amount of people looking right now is dropped by 16%. So a fall in rents makes sense. Now, my belief is this is a short-term thing and it will adjust because the population still is increasing and the amount of rental property on the market as a whole is stagnating. It's not going anywhere and it may even fall over the short term. So with that in play, I still feel reasonably confident that rents will be up overall this year. And this is just a temporary while that supply and demand balance is gone the other way. But I do think it'll readjust again. We will see. That's what we predicted on the podcast at the beginning of the year. Even with this information being presented today, I still feel confident in the more medium-term outlook that we have. But in the short term, if that supply and demand balance goes a certain way, then the prices will absolutely follow.
Okay, here's another few words that you haven't heard in a while. Landlords are feeling more optimistic.
Did they ask them while they were on holiday or have they found these landlords?
Yeah, they must have done.
Before I bring your next cocktail, can I ask you about the property market in the UK?
I assume this is how they did their data. They are a mortgage firm, so they want people to be transacting after all. So they do have a vested interest here. But I suppose another way of thinking about this is maybe it couldn't have got much worse. The sentiment was so bad, it could only get better. And indeed, there are still only 37% saying that they feel good or very good about their prospects. But it is an improvement. They asked a follow-up question about the Renters Reform Bill, which no one is feeling positive about at all. 65% believe it's going to have a significant negative impact on the private rented sector. A smaller number than that think that they will be negatively affected personally. But like it or not, and in this case not, it is going to happen. The Renters' Rights Bill, as we've reported in the past, is still moving. It sounds like it's probably going to finish. It's making its way through Parliament by Easter or so. So it may actually come into force before the end of this year, which is seeming unlikely at some point. But we still don't know. There's still loads and loads we don't know. But of course, we'll continue to keep you updated here and in the Property Pulse newsletter. And finally, because I like to end on a bit of we might be seeing more selective licensing schemes. I didn't notice this, but apparently this happened at the end of last year and completely passed me by. But local authorities can now bring in licensing schemes without government approval. For a while, they needed to go and ask permission from central government, and that's because some local authorities were abusing this power before, but now they've got rid of that, and authorities can do basically whatever they like when it comes to licensing. So the first sign we've seen of someone making use of this power is Barking and Dagenham, where every property in the borough is going to need to be licensed, and that licence costing about £900. So wherever there is money that can be charged for doing not much in return, I'm sure other councils will be looking to do the same. So property licensing increasingly becoming just part of investing life. The majority of my properties, I think, seem to be affected by it in one way or another. It seems like that's going to continue to be the case. So if you have properties that are not affected by licensing, think yourself lucky.
Rob, I know you want to leave us on the high of landlord licensing, but I just want to observe something. As a month goes, the news from January isn't exactly uplifting. There's some interesting stuff in that, and hopefully the insights to what you can bring you beyond the headlines have been really interesting. But my overall observation of this is that the property market late last year seems to be performing reasonably well. Last year, we saw some decent growth and we saw rents increase as well. And if you're an investor, they are good things. Not great if you're renting, but good for investors. This year, I fully expect the same things to happen again. But yet, sentiment is so low. And the news out there isn't exactly inspiring as well. I just think, imagine what will happen when people start to get a bit of belief. And you could expand this beyond property to go on very big motivational speech here, but like belief in the UK, belief in our economy, and belief in the property market. I think once these things kick in, and at some point I'm sure they will, at least to the property market anyway, then we will see behaviors and numbers increase even more, because if it's doing well when everyone's feeling a bit more, imagine what it'll do when people are feeling motivated and positive about the sector. So I think there's an interesting thing to observe. Like, yes, the news may not be, oh wow, let's go, but the market's still going and it's still ticking along and it's still growing nicely and it's still performing well. And because of this sentiment, there's some great opportunities as well. So when you hear news stories like this, don't think, oh no, think, oh yeah, opportunity. Take advantage of the sentiment. You should do this in all markets, but as with a property podcast, do it in property. When the sentiment is not there, that's when you want to get interested and most active. And I think it creates a beautiful opportunity. So use this month to go, brilliant. More crap sentiment. Let's go.
Don't appreciate how you've taken the focus away from landlord licensing, but yes, I completely agree. I think that's a really, really important point.
I'm sorry, Rob.
Well, let's move on to Hub Extra, put all this aside and talk about TV, because we've both been watching The Traitors and we can't do any spoilers, which is a shame because I really like to chat about it with you, but it is such a great show.
Oh, it's brilliant. So my son was watching it and I remember having a conversation with it when he had it on in the background, and I suddenly found myself asking lots of questions like, who's that? Who's the traitor? Are they a traitor? Like, I just suddenly found myself addicted after 2 minutes of watching, and then ended up watching the rest of the series, and my whole family as well watching the rest of the series with him. Absolutely brilliant TV. The producers must have absolutely loved the twists and turns this year. And we were saying Claudia, who presents it, what a presenter she is. She's absolutely fantastic. Soups that show so much. What I really love, Rob, is this time of year, UK TV really steps up. I think it's to help distract us all from how dark and cold it is. Maybe it is, but who cares? I'm loving it. They are doing well at that distraction. There's some brilliant TV at the start of every year, and I'm very, very much enjoying it. And Traitors is a strong recommendation from both of us.
Traitors is so good. There's a subreddit for Traitors with people endlessly dissecting it, so I spent some time on there. We've now moved on to Traitors New Zealand because I couldn't come to terms with the fact that the UK edition had ended, and that's pretty good as well. But Rob, when I finally get to the end of the English speaking, is there anything else out there? Any other TV you're enjoying?
Well, I've talked about some really good programs, some serious stuff like Slow Horses on Apple TV previously, but I just love Gladiators, Rob. I love it.
Yes.
I know it's cheesy. I know it is, but that's why I love it, because I am cheesy. It's just the perfect Saturday night TV. Absolutely love it. Will not miss an episode. If something important on is in my life, it's definitely getting recorded. I enjoy it very much. I've got a question for you, though. What would your Gladiator name be? What would your property podcast Gladiator name be?
Oh, man. I can't think of a good answer to that on the top of my head. That's a brilliant question. Maybe we should have listeners write in.
The Leverager?
The Leverager. That's great.
I'm sure the people listening can do a lot better. Do let us know on our social channels. I'm sure our marketing team may even be cruel enough to do mock-ups of us in Gladiator outfits. So what would our Gladiator names be? Don't be too cruel. Let us know on the socials at Property Hub UK.
They don't need to mock anything up. I send them pictures of myself in leotards all the time anyway. Right. Probably why I've got such a big staff attrition problem. Anyway, that is us done for this week. Thank you so much for listening. I feel like we should play us out with the Gladiators theme tune. I've got it in my head already, but we won't for copyright reasons. Come back and join us next week for the Property Podcast. We'll be back here to do it all again. Until then, have a great week. Bye-bye.
Bye-bye.